Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects that you need to consider when you are self-employed. So today I'm going to talk about what expenses can you include in your self-assessment tax return. Before I move on to that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding information on a whole wide range of topics that we have available. And if you want to be notified as soon as we upload new information, then you should also turn on the notifications. So, what expenses can you include in your self-assessment tax return? So you will remember from other guidance that we've provided that when you complete your self-assessment tax return as a sole trader, you will be including the supplementary form for self-employment. Now within that, you will be determining your income, i.e. your sales and your turnover, as well as your allowable expenses, and also that includes your capital expenditure. So how do you know what you can include? So we don't intend here to go through specific lists of things that you can include, but more the general ethos of what you should be thinking and how you can get more guidance on this. So generally speaking, any expenditure that you incur must be wholly and exclusively for your business. So a good way to think is, if I wasn't running my business and if I wasn't trying to earn this profit, would I have incurred that expenditure? And if the answer is yes, then clearly the expense isn't wholly and exclusively for your business, so it wouldn't be included. But it is also a good way of making sure that you don't forget things to include. And of course, as we move into the digital era and a lot more people are starting to run their accounts and keep their accounts using software, then this of course helps, because with bank feed links, everything is reviewed, and you're actually looking at the transactions to think, oh yes, that is a business expense, because some things that you made, subscriptions for example, they just go out of your bank account each month and they can be easily missed off in your expenditure. So that is a starting point, and in the description I'm going to give you a link of where you can actually get more guidance if you've got a specific thing that you're not sure whether you can include or not. And of course there's no reason that you can't submit your own self-assessment tax return, but if you're in any way unsure, then it is advisable to engage some professional help in completing your tax return. And you can often find that by knowing the exact things that you can and can't claim, actually that this can be a cost-effective way, as also giving you the peace of mind to make sure that you haven't inadvertently claimed anything that you shouldn't be including. So some things are really sort of straightforward. For example, if you have purchased some materials to help you to complete a job that you're then going to invoice as a sale, then that clearly is your cost of sales and an allowable expense for business. But some things can be a little bit tricky to work out whether. So let's suppose, for example, that you get some personal benefit from the expense that you're considering. So again, we're talking about sole traders here. So obviously, if you're a limited company and you're being paid as a director, then there is a benefit in kind implication, but that's beyond the scope of what we're talking about today. We're specifically talking about sole traders completing a self-assessment tax return. So if there is any personal element in the expense, then you must apportion it. So if you say that you for example, your telephone line, perhaps you use that for business, but you also use it for personal, then you must apportion that and actually validate how you've decided the percentage that you will be disallowing for personal. So if you say actually 25% of that use is for my personal use and 75% is for the business, then you would only claim the 75% of it. Or if you put the full cost in your self-assessment tax returns, when you get to the disallowable expenses, make sure that you are making a record. Whichever way you decide to do it, you should always keep clear records on how you've decided the percentage to apportion in that scenario. So let's move on to use of a car or a vehicle, because this can be quite confusing for people. Now it will depend on what vehicle you're using. So say, for example, in your business, you have bought a vehicle, perhaps you need a van for your business, so you've bought that specifically for your business, you only use it for your business use and there is no personal use of that, you have another vehicle which you use for your personal use, then this would be quite straightforward for that van, because it's wholly and exclusively for the purpose of your business, and therefore any cost that you incurred for that van, so the fuel, the servicing, the tax, the insurance, they would all be legitimate business expenses. But say, for example, if you're using your personal car for business as well, you don't necessarily need, or you can't afford to buy a separate business vehicle, and so therefore when you do need a vehicle for your business, you are using your personal car, which you also use for personal use. So this can be quite tricky, because if you, for example, it just would be impractical to say, well, I'm going to, every single time I go on a business journey, I can assess exactly how much of that fuel that I've bought is for business and how much is for personal. So that would be sort of like very difficult to assess. What we would need to look at in that scenario would be to say, well, actually, I've recorded all of the total costs of that vehicle, and I also have accurate mileage records for the year that show that X percentage of that mileage was for personal use and X percentage was for business use, and therefore I'm going to apportion, as we talked about earlier, i.e. only claim the percentage that is for business use. Now, this sounds really straightforward, but in practice, it's actually very difficult to make sure that you record every journey that you do, and therefore that you can accurately demonstrate a percentage. And also, if you are VAT registered, there are some implications on claiming the sort of fuel percentage on this, with you having to pay fuel scale charges. So that is something to bear in mind if you're VAT registered. So a simple way of overcoming this can be to simply claim mileage allowance for your business use of your vehicle. And so what I mean by that is that anytime that you are using your vehicle for business use, you are keeping an accurate record of the mileage that you are covering for that business. And when I say an accurate record, what I would expect to see is the date that you completed that journey, what the journey was for, where you went, and obviously the return journey, the mileage that was incurred. And you would claim, currently the rates are 45 pence a mile for the first 10,000 miles, and then it drops to 25% after that. So that mileage allowance is intended to cover the fuel that you're using, but also the actual wear and tear in effect on your car. So so that a contribution towards the other things that we talked about earlier, so the license, the servicing, the repairs, all of those things. So if you're claiming mileage allowance, it is important to remember that you then wouldn't include any of the other costs. So if you have paid those out of your business, then of course you would account for those as drawings, and you wouldn't be included them as an allowable expense. So again, this can be quite confusing, and if you're not sure, it can be advisable to take some advice on this, but certainly we'll be popping the link to the HMRC guidance in the description to help you with this. So another thing that can cause confusion is if you buy an asset. So by that, what I mean is something that is going to be used in your business for a number of years and is a relatively high value, because of course everything that you buy that is tangible is an asset. So for example, if my stapler breaks and I buy a new stapler, technically that is an asset, is something that my business owns. But of course, it's not practical to hold an asset register for every tiny thing. So for this end, what I would suggest is that you have a sort of a threshold that you sort of decide any item that costs, say, under £500. You may even say £100. It would really be individual to your business what level you set. But anything under that you expense as a business expense and claim it in that way. And anything over the limit that you choose, that you would treat as a capital asset. Now, the important thing here is to really to be consistent, so not to sometimes treat something that's £100 as a capital asset, and then something the next week that costs £400 as an expense. So it's always consistency is very important once you've chosen your method of how you're going to deal with a thing. These days, capital assets, you can still have the tax relief straight away if it falls within the annual investment allowance. You can claim an annual investment and have the tax relief straight away. This can be a little bit tricky, and we're going to talk about that more we've had another question on that, so we'll cover that more in a later video. Again, it's something that you need to consider when you're looking at what expenses that you can claim, to remember that if you have bought capital assets, then yes, you will be claiming them, but in a slightly different way than you would with your general business expenses. So I hope that answers that question. And as ever, if it throws up more questions or any element of it needs further explanation, then please do let us know, and we will look to provide the information that you ask at a time shortly. So as I mentioned before, again, please do take a moment to subscribe to our YouTube channel, and thank you very much for watching. Take care. Bye.